Russia's invasion of Ukraine has brought even more volatility to the crypto market. The global financial implications are just one of the many costs of war. Experts also fear a significant human toll, with Ukrainian President Volodymyr Zelensky announcing more than 100 Ukrainians were killed after the first day following the invasion. As the war continues, volatility in global financial markets, including cryptocurrency, is sure to follow. Regardless of asset class, there's a tremendous amount of volatility that comes with war, and it's going to make it that much more difficult for investors to stick to their strategies. Bitcoin dropped below $35,000 and Ethereum dropped below $2,400 immediately after the invasion started, though both have risen since then. Bitcoin has dropped by more than 30% since its November high of $68,990, thanks to the recent geopolitical tensions in Europe, looming inflation, and prospects of interest rate hikes by the U.S. Federal Reserve, among other factors. With no signs of slowdown to what President Biden described as an act of war on the part of the Russian President Vladimir Putin, experts say cryptocurrency investors should expect more volatility ahead. But the cryptocurrency bounced back almost as quickly as it crashed, with some analysts pointing to Bitcoin's ability to serve as a safe haven asset during times of geopolitical uncertainty. Ukraine's request for Bitcoin and Ethereum donations over the weekend prompted millions of dollars worth of cryptocurrency to be given towards the Eastern European country's defense efforts, which the Ukrainian Digital Ministry saying it would be used to help Ukraine armed forces. Ukraine also asked exchanges to freeze Russian and Belarusian crypto accounts, and on Monday, the Russian cryptocurrency exchange BestChange appeared to be down. Crypto wasn't the only commodity affected by war. Oil prices soared, and investors shifted more money into ultra-safe U.S. government bonds as Russia stepped up its war on Ukraine. Stocks fell following a volatile day for major indexes as investors try to measure how the conflict will impact the global economy. The bigger moves came from the markets for oil, agricultural commodities, and government bonds. Oil has been a key concern because Russia is one of the world's largest energy producers. The latest bump in prices increases pressure on persistently high inflation that threatens households around the world. U.S. benchmark crude oil prices rose 6.6% to $101.87 per barrel, reaching the highest price since 2014. Brent crude, the international standard, rose 6.6% to $104.44. Russia's invasion of Ukraine has also put more pressure on agricultural commodity prices, which were also already getting pushed higher with rising inflation. Wheat and corn prices rose more than 4% per bushel and are already up more than 20% so far this year. And Ukraine is a key exporter of both crops. So, definitely, the war is affecting every market and commodity. But again, do we think now is the best time to invest in Bitcoin? The truth is, and this is not a financial advice, but an opinion, is that investing in Bitcoin is a long game strategy that we think will eventually pan out. We will list 3 reasons why we think so. Number 1, Bitcoin acceptance is on the rise. Bitcoin acceptance has been widely spreading to many popular companies which are publicly backing the crypto. Additionally, the number of users that are adopting the blockchain wallet has been on the rise constantly every year. The fast pace at which users are adopting the crypto is an indicator that the popularity of Bitcoin isn't going to go down anytime soon. Plus, as said earlier, we saw how Ukraine was able to get funded using crypto. Bitcoin and Ethereum to be precise. That is a very practical and reliable example of what crypto and Bitcoin has become and how useful it is. Number 2, Bitcoin investments continues to grow. According to reports, the number of investors who are purchasing Bitcoin via platforms such as PayPal and Cash App has been steadily growing. In fact, the Cash App's Bitcoin revenue has soared to a whopping $1.6 billion. In 2022, nearly every economic sector will accept Bitcoin, and developers have collaborated with big financial firms like PayPal, where you can cash your coin from anywhere in the world. and some countries even use it as their reserve. Number 3. Suited for the macro climate. Another reason to invest in Bitcoin in 2021 is because it's perfectly suited for the macro investment environment. It should be noted here that the cryptocurrency was born out of the 2008-2009 global financial crisis. Bitcoin was released into the world during a time of government and bank bailouts where it thrived, albeit being ignored by the masses during its initial days. Years later, the world is going through another crisis where many governments are going through bailouts and other crises of their own. During these times of crises and Bitcoin's soaring popularity, it is easy to see the unique value proposition that Bitcoin has to offer. As with any other investment, buying Bitcoin also comes with its fair share of risks that are well known, one of which is its price that tends to experience a sharp drop from time to time. But the good news is that crypto has always managed to shoot up, and its recent soaring price is testament to the success of Bitcoin. Other risks are more of a personal nature. For instance, you could lose your entire Bitcoin stash in a second if your hard drive crashes. Apart from that, hacking incidents aren't unheard of, which bumps up the risk of investing in crypto. The good news is there are many app trading bots that allow you to invest in Bitcoin and other cryptocurrencies safely and securely. That's all we have for you today. Thank you for watching. Don't forget to leave us a like and hit that big bold red subscribe button to subscribe to our channel. Till next time.